γεια σας. Έχουμε σήμερα την τιμή να έχουμε στο στούντιο του ΚΙΠΕ την πρόεδρο του Ενιαίου Εποπτικού Συμβουλίου, την κυρία Κλάουδια Μπούχ. Η κυρία Μπούχ βρίσκεται στην Κύπρο στο πλαίσιο της συνεδρίας του Ενιαίου Εποπτικού Συμβουλίου εδώ στη Λεμεσό και με την ευκαιρία θα έχουμε μια συζήτηση μαζί της για το τραπεζικό σύστημα της χώρας μας και ευρύτερα της Ευρωπαϊκής Ένωσης. Ms. Buch, welcome. And now we'll get into the point and ask you about your comment on the situation of the Cypriot banking sector from a supervisor's standpoint, and what are the challenges going forward?
Yes, thank you very much for having me here. And actually what I would say about the Cypriotic banking sector is also very similar for many European banks. So the situation is good, the banks are well capitalized, and this is now a specific feature for Cyprus. The share of non-performing loans has decreased quite significantly over the past years, from around 50% to I think it's now about 7%. So this is a very big reduction. It's still higher though than the euro area average. So there's some way to go, but this is a remarkable improvement. And generally the banks are profitable right now because we have higher interest rates, and that's good for banks' profits. Now you also asked about what to worry about and what are potential risks for the future. And clearly what one needs to say is that we haven't seen the full impact of higher interest rates on banks' balance sheets yet. So as there's more pass-through, more impact of higher interest rates on deposit rates, of course this will have negative implications for profitability. It might also be difficult for the banks to pass higher interest rates to their corporate clients, because we also know that in many areas credit demand is weak. So that's certainly something to watch, what happens to bank profitability going forward. And there's of course the big issue about risks, novel risks, geopolitical risks, climate risks. This is really something which is at the focus of European supervisors, and we work very closely with the banks to make sure that they are vigilant and they also do good forward-looking risk assessment as regards these novel risks.
Well, okay, we have here a merger underway in Cyprus. Hellenic Bank, the island's second largest lender, is under acquisition from Greek Eurobank. What is the supervisor's view on this cross-border merger?
So there's one rule that supervisors have: they never speak about individual banks. So I can't say anything about this individual bank case that you mentioned. I can say something generally, what supervisors, how supervisors would look at consolidation in the banking industry. But again, this is not a statement about the current case or the current cases that we're seeing. So, I mean, in some sense, we are neutral with regard to what types of business decisions banks take in terms of consolidation, whether they merge domestically or cross-border. So supervisors really look at the prudential implications, and prudential implications means how capitalized are the banks, what is their liquidity situation, what is their governance, what is their business model. So these are the things we look at. And there's, as you may know, in Europe there's also a discussion about cross-border banking activities. So we've also looked at the supervisory approach to this, and there's certainly nothing that stands in the way from a supervisory perspective when it comes to cross-border activities of banks. But again, this is a very general statement. It's not related to the specific cases that are under discussion.
On a general point, correct me if I'm wrong, but the SSM, since its inception, has always been advocating for cross-border mergers or acquisitions, which would create larger and more resilient banking groups or banking institutions, if you will. This is correct? This is a fair point?
Well, I wouldn't necessarily say we've been advocating, so because, as I said, we don't really have a view on what type of consolidation is the better approach. So we look at the prudential implications. There's certainly been an expectation that with the banking union, which is not just about supervision, it's also about the single resolution mechanism, there's been an expectation that the banking union would lead to more cross-border activity, and we have seen more cross-border activity, but not that much. So the integration process is a very slow process. This is why I said we've looked into what more can be done from a supervisory perspective to make clear what is our approach also to consolidation, cross-border consolidation. We've explained this to the banks. But from this review that we've done, we don't really see anything that would stand in the way from a supervisory perspective. Of course, we have to acknowledge that the countries in Europe are very different, and there's different legal systems that apply, different cultures, and so that might also be factors that hold back or promote cross-border activity.
Okay, thank you. Now, let's turn to the euro area banking sector. How do you see the euro area banks, and how do they compare with the US peers? It's a question I think always the supervisories, they have such a question.
Yes, I don't hear that for the first time. So, like I said, I mean, the European banks are definitely, when we look at the past 10 years, so we're celebrating the 10th anniversary of the banking union, the European banks have become stronger, more resilient. And this is also to a large extent the effect of the post-crisis financial sector reforms. They have more capital, they have better governance, and so I think this is, we're in a very good position. Now you're asking about how does this compare to the US, and I would say that of course we're seeing, and this is sometimes cited by market participants, that the valuations of European banks differ from the US, are lower in Europe. It's actually interesting to see that the same holds also for other industries. So maybe that's a broader question about the competitiveness of the European economy, but this is for others also to assess. So, and I wouldn't say, I mean, this is what you sometimes hear, but I wouldn't say that it's regulation or supervision that is the reason for the differences in valuations. So, of course, I mean, the US banks are regulated as well. They have a very refined regulatory framework and supervision. So, I think supervision is the wrong place to look for these differences in valuations. And I mean, it's my task, it's our task actually jointly with the colleagues from Cyprus and the other SSM countries. It's our task to make sure that the European banks are strong and resilient and service the European economies and citizens in the end.
Okay, you made clear that supervision is not the culprit here, is not to blame regarding the comparison of EU and US banks. But okay, supervision has been a good thing. I mean, if we take an example of the COVID pandemic, the EU banks had all the fundamentals and the capital metrics to absorb all the shocks. And even now with the geopolitical crisis, they are not doing badly, I think. And perhaps this is due to supervision, right? I don't know.
Mm-hmm. Yeah, I mean, first of all, one needs to say that also the banks that are well capitalized can also lend better and service the real economy in a better way. So the stronger banks are actually those who are in a better position to lend. It's interesting that you refer to the COVID pandemic, because there indeed the banks were very resilient. So they kept lending to the real economy. We didn't have a credit crunch or anything like that. And that's clearly due to the better capitalization, the better trust in the European banks, an effect of the reforms. But there's one important element that I always stress there, which is that we've of course also seen a lot of fiscal and monetary support during the COVID pandemic. So there was a lot of support given to the real economy, to the borrowers, to the real economy. We've actually seen a decline in corporate insolvencies in a period where we had a large decline in GDP. So usually during normal recessions, this is the opposite. No, we would expect corporate insolvencies to increase. So this has also been a strong stabilizing factor, of course, for the banking sector. So there was fiscal support for the real economy, which indirectly benefited the banks. There was lots of liquidity provision through central banks. So I think this was, I mean, definitely, I mean, COVID was a very stressful situation for societies and for the real economy. But the banks came out of this relatively unshattered, and this has implications also, of course, for the forward-looking risk assessment.
Okay. Let's turn to the outlook of the euro area banks. How do you see the outlook in an environment of elevated interest rates? Do you see a potential rise to NPLs? What are the data so far?
Yeah, so far we are seeing a small increase in non-performing loans, but this is really not a very big effect. So we know also that it takes time when we have a slowdown in the real economy. It still takes time until non-performing loans materialize, and this is why we are so much pushing for a good forward-looking assessment of risk. And again, this is related to the discussion we just had about COVID. The patterns that we've seen in the past, a recession, a decline in corporate insolvencies, this is not, in all likelihood, the pattern that we will see in the future. So we need, the banks need to do a forward-looking risk assessment. They need to make provisions also for potential future risks that could come from very different risks. So it can be geopolitical risks, climate-related risks. So this forward-looking scenario analysis, scenario planning, this is something that is very high on our agenda.
Okay, as you spoke about the agenda, what are the priorities of the SSM in this year or going forward?
Yeah, well, as I've said, we build on very strong foundations. So I think we have a functioning system. We very well cooperate with the colleagues across the SSM. But the environment around us has changed. So we have new risks that we've just been discussing. So we need to make sure that we understand these risks, that we work with the banks so that they can sufficiently address these risks in their risk management. So that's for the banks and how we interact with the banks. And then we've learned from the banking turmoil last year and from the reports of the authorities that also supervision has to adjust. So we have to become more effective, more efficient. So that's the second priority we have collectively as the supervisory board, to also improve our own supervision so that we can focus on the relevant risks and make sure that these risks are being addressed. And we have, if I may, a third priority, which is reaching out and also reaching out to the broader public. So that's why it's good to be here. Okay.
Well, you gave me a bridge for the next questions in terms of new emerging risks. Now, a very important factor in the euro area and in fact in the whole world is the green transition, the climate change, and climate risks to the banks. How important is climate risk for the banking sector, and maybe will we see any capital requirements concerning climate risks?
Mm-hmm. Yeah, that's a good question, and we've asked that question to ourselves and to the banks several years ago when we did the first climate stress test. And we saw that transition risk, so policy changes, but also other things that can happen in the transition to a greener economy. So that transition risks are important, and also physical risks, of course, so very practical. We've seen it in many countries. So these risks are important. Many banks until recently didn't really take these risks into account. And how do they materialize? It's credit risk, it's operational risk, so it's not new risk categories, but it's a different impact factor here. So we've seen that the banks were not sufficiently prepared. So then we defined very clear supervisory expectations, and we follow up upon them. So the banks have until the end of the year to meet our expectations. We gave them clear timelines, and we need to see, I mean, many banks have adjusted, some are still lagging behind. We need to see how they meet our requirements, and then we use the full, I mean, the regular toolkit that we have. We can impose periodic penalty payments also on the banks, but we need to see how they meet our expectations and how they've adjusted their behavior. So this is still pending.
Expectations. Could you elaborate if you can?
Sure. Yeah. No. Generally, I mean, we have expectations how banks should manage risks, how they should control the risks that they see. What internal information systems do they have to really measure the risks? In the end, it's a question about measuring what is the climate-related risk that's embedded in a certain lending contract. So that is what our expectations are about.
Okay, and it's known to everyone. The other risk which has emerged with the digitization and the progress of technology is cyber risk. And if I remember correctly, you have stated in a speech that we are a bit vulnerable in cyber risk.
Yes, not just the banks, but I think we clearly see from all the reporting, and we have a regular reporting since a couple of years on cyber incidents in the banking sector. So that information is also on the aggregate number. That information is publicly available, and we see that the frequency and the severity of cyber incidents is increasing. So this is why for a long time we have been very closely working with the banks to make sure that they're sufficient resilient. And what we've done in this year is a cyber resilience stress test. So we have a survey and we work with specific banks very closely on how well are they prepared, what recovery mechanisms do they have once they're being affected by a cyber incident. So I can't give you the full results yet because our colleagues are still working on it, but they will come out this summer. So there will be general information for the industry, also in terms of best practices, and then we will follow up with the banks where we've seen deficiencies that will be part of our supervisory process.
Will we be seeing capital requirements and on this regard as well, or it will be embedded in the dialogue, in the SREP process you have with the banks individually?
Yeah, so I mean, so generally we have the supervisory review and evaluation process, as it's being called, and that leads to qualitative requirements. So some of the things also can't be remediated with higher capital, but they can also lead to quantitative requirements, and that remains to be seen for the individual teams. What tools are they using? But of course, I mean, if there's higher risks, there also needs to be sufficient buffers, sufficient resilience, and that comes through capital.
Okay, thank you very much for your time.